So with the world in total chaos, there are a number of financial events that are going to occur to millions of people throughout the world. And some of these events are going to be worse than others. Now, our goal here on this channel is to help educate people with personal finance, showing them how to save money and make money, invest, and create a better financial future for yourself. So if you're new here to the channel, make sure that you subscribe, and let's get started here discussing some of these money traps, these events that are going to occur to so many people that we need to avoid. And don't forget to hit the like button, I guess, if you want to. So the first money trap is get-rich-quick schemes. Now, these always seem to really crop up during recessions or during times when 26.5 million people in America are out of work. Suddenly you see people coming out in droves telling people that they can show them the way to make money. And you know, you probably see these ads before my videos all the time, or if you're on Facebook or Instagram or Snapchat or pretty much anywhere on social media. I don't like to generalize, but it tends to be a 20-year-old guy with a Gucci t-shirt and a BMW i8, and he sticks his phone in your face. He says, I made $54,000 last month with Shopify dropshipping. I'm gonna change your life. Just join my free webinar or my free training, or pay me $2,000 and I'll show you how to do it. That's what that means. They're squeezing money out of people. And this isn't to say that all online courses are bad, but during a time like this, sometimes you see people who are preying on others, and they're using specific ads to target specific people, telling them that they can get them out of the debt that they're in, that they can change their lives, and by next month they're making $100,000. Now, maybe this is the case for some people, but there are far too many fake gurus squeezing money out of people who cannot afford to put food on their table tomorrow. They convince them to buy their $2,000 online course with their credit card, rack up more debt, and then take advantage of those people. You know, it's really a shame to see it happen. It's 2020. This is what happens. That's not to say that all online courses are bad. I have a number of friends who actually have some really great courses. Look at Meet Kevin or Graham Stephan or Ryan Scribner. They're some of my friends who have some really good courses, and they care about their students. They care about the information that they're putting out there, and they're helping the people. But there's a lot of bad apples in the industry. So please be aware of these get-rich-quick schemes. If somebody's telling you that overnight they can double your stimulus check or make you extra money, just please watch out for them. There are so many scams out there at the moment. It's absolutely pathetic. You hate to see it happen. But when people are in financial stress, that is when the terrible people come out and they just squeeze money out of people. They just wring you out like a sponge. Not cool. Now, another thing that comes up in many times like this are predatory loans. And this is really looking at financial institutions and companies that prey on people who they know that they can't pay their bills. They know that they can't afford anything. And so they go out and they say, hey, don't worry, we can front you some money. We can lend you some money. And then next thing you know, this person who is desperate, sure, you could say it's their fault, but when somebody's absolutely desperate and they need to put food on the table tomorrow, they're more likely to end up getting into these predatory loan programs, whether it's payday loans. It's this app that maybe you've seen those ads where they're like, I'm at the gas station filling up on gas, but I don't get paid till next week thanks to this payday loan, right? A lot of these, I just don't like them. If you've been watching this channel for a long period of time, you'll know that we're very against debt. We're not as crazy as Dave Ramsey about it. It's your fault. But please try to stay away from debt and any of those loans that are predatory or ones that are really trying to keep it pretty deceptive. They want you to end up in their programs where they can front you some money, they can lend you some money. They want you to not read the fine print that says you owe 30% interest on this money, and it's just a really bad situation for a lot of people who end up in that debt. Now, I always try to avoid politics on this channel because honestly, I don't care what your political views are. I don't even care about politics, but I really don't like to see companies that prey on people who have no money. They cannot afford to pay their bills, and they know that they can squeeze pennies and nickels out of these people because they can take advantage of their current financial situation. I don't like when companies do that. There's plenty of money from middle class, upper class, other businesses, but the companies that solely focus on how can we squeeze as much money out of this person who makes $7.25 an hour, I just don't like it. I don't think it's good. So one that we've seen occurring for quite a period of time is letting market fluctuations make you do something that you're going to regret in the future. I'll give you an example of this. I know people who bought a lot of stocks in January and February when the Dow Jones was at 29,000 points. And then they watched the market slide. They got very scared. They thought they were going to lose a lot of money. They did lose a lot of money, but they ended up selling when the market was at 18,500 points on the Dow. They ended up selling when the markets were down 40%. And then now they've recovered a good bit. I don't know how much of it's real. To be honest, the markets are sitting pretty high right now, but they sold at these bottom parts. And this actually occurs to a lot of people where they end up buying high and then the markets come crashing down. They get scared, so they sell. They sell when it's low. And then they watch the market recover and they say, man, I just missed out on some good returns. I better buy. And so they buy at the top again, and next thing you know, it goes down again. This is a really vicious cycle that I see dozens of people getting into all the time. So the key here, and we said this in many other videos, is to use logic rather than emotion. You're going to see news, you're going to see a lot of fear mongering, and there are a lot of extremely valid problems in the economy at the moment, of course, but make sure that you keep your head in the long term, thinking about companies' long-term profitability if you are investing into the stock market, rather than looking at a news article saying that the world's actually going to blow up next year and then selling everything because you think that the markets are going down to absolutely zero. Now, I can't tell you where the markets are going, but I can tell you this, that when the markets were below 20,000 on the Dow, I was buying stocks. It was a difficult time to do that. Trust me, it's a lot more difficult to actually press the buy button when you look and you just lost like $30,000 the week prior and then you're buying more stocks. It's extremely difficult to get yourself to do that. And it's not always the right option, but during this time, I thought it was the right option and I was buying stocks when they were down. And so now I'm up quite a bit. And that's not to say it's going to stay up forever. I think we're due for some many headwinds in the future, but make sure that you are not making decisions that you're going to regret in the future because you were using emotion rather than logic for your investment. So another trap is expecting the government to bail you out in these situations. Now, once again, I don't get political on this channel, but if you are banking on the government giving you another stimulus check, please don't, because I think there will be more stimulus checks. I think there will be more money flowing out into the hands of the American people, but don't bank on it. Don't factor it into your finances and use it as a last resort. I'm talking like plan A, B, C, D, E, F, G. Plan G is rely on government. Everything before that you should be doing to ensure that you are able to fend for yourself and fend for your family and make sure that you are helping others in your community before you rely on the government to assist you. Now, this might sound a little bit personal to some people, and I'm not personally coming at anybody here, but if before this recession you were making $100,000 a year or more, and you are suddenly sitting here now and you're not able to pay your bills, you can't pay your mortgage, you can't pay for your new BMW, that's your fault. And it's important to take responsibility for that. If you're making $20,000 a year or $30,000 a year and you can't afford to pay your bills at the moment, that's understandable. But what we're referring to here are the people who were making a lot of money, middle class and upper class people who did not save any of it. They don't have an emergency fund. They don't have a rainy day fund. And now they're sitting here struggling to pay their bills. That's your fault. And it's important to take responsibility for that. And I know some people are going to get really angry at that, but it's true. And people have been watching this channel for a long period of time. You've saved your money. You've built that 6 to 8 month emergency fund, and you're sitting there, hopefully, with that emergency fund, feeling a little bit okay. In terms of finances, I know there's a lot going on in the world, but in terms of finances, you're feeling a little bit okay knowing that you're able to pay your bills for the next 6 months because you've saved up that emergency fund. So it's important to take responsibility for our actions so that in the future, we can set ourselves up for success. For the next recession that occurs, we know that, okay, this is what we need to do. It's important to take responsibility for that so that we have those funds set aside for any type of event such as what we're dealing with at the moment. And a lot of people don't like to take responsibility for that. They'll find any way to blame possible. They'll say it's somebody's fault for starting the virus or spreading the virus, or just find somebody to blame besides themselves. And it's something that takes a lot to really look at yourself and say, you know, this is my fault for doing this. And this happens to me all the time. Sometimes I'll be pointing the finger. And, you know, if you get in a car accident because you rear-ended somebody, you say it's their fault because they were braking too hard. But in reality, sometimes you have to look at the situation and say, you know, I was probably tailgating them. I was probably too close to them. And it's difficult to do that. It's difficult to do that because in a lot of cases, it's easy for us to look at ourselves as the victim because it's easy to be the victim. It's true. You know, that's a little personal there, but it's true. And please don't fall into the trap of paying just the minimum payments, especially on your credit cards. Now, I know there's a number of people doing this because they're struggling to pay their bills, but if you get your stimulus check, if you get some money, pay those high interest debts as fast as possible. Don't just pay that minimum payment. If you can afford to pay more because those credit card bills is what's going to haunt so many people. So paying just that minimum payment, it's going to be detrimental to your finances because at the end of the year, when you look at your finances and you see that you have $8,000 worth of credit card bills at a 25% interest rate, it's going to be absolutely detrimental. It's going to be difficult to dig out of that hole. You're digging yourself in a hole and you need to get out of it as fast as possible. So avoid just paying the minimum payment if you can. Of course, if you can't, there are other options. I mean, you could transfer it to a 0% APR card or or you could find other ways to pay it off, consolidate loans, but please avoid just paying the minimum payment if you can. And finally, make sure that you avoid some of those 0% APR deals that are only for a certain period of time. Now, there are actually a lot of good deals that are opening up at the moment for buying certain products. I saw that GM just extended a 72-month 0% interest deal for their cars because they're trying to sell cars. Now, honestly, is actually not a bad time to buy a car. And probably throughout 2020 should be a pretty good time to buy a car because you're going to have really low interest rates and you can probably negotiate pretty well because a lot of dealers, they need to move inventory. These car manufacturers, they need to move inventory, but who's buying a car right now? Not many people. And so there could be good deals, but I want you to avoid some of those ones that you're going to see in big letters that says 0% APR, 0% interest, and then really tiny next to it, you'll probably see like a little star, and then you got to go all the way down to the bottom of the page, and then you'll see some really tiny fine print that says 0% APR for the first 12 months, and then it's 30% APR or 25% interest. Be careful of that. Make sure that you read all of that fine print. They make it tiny on purpose because it's not good, it's bad. And so make sure you read through that before you sign on any dotted line for any type of loan. So hopefully you found some value in this video. If you did, make sure you drop a like, subscribe to the channel if you haven't done so already, and I'll see everybody in next week's video.